Hello, my name's Tim Gregory. I'm from Vermeer Investment Management and I'm here to talk to you today to update you a little bit on our thoughts about the upcoming US results season. And it's our view that this is a very important results season. I guess all results seasons are very important and for different reasons, but last results season, if you think back to January, we were entering a period of time when the markets had been very poor and company expectations perhaps were set somewhat lower as stocks had been so depressed. So companies were able to set the bar low for their numbers, generally speaking, as is so often the case, beat those results and get a positive share price reaction and potential upgrades to their earnings going forward. And as a result, we saw a good earnings season that led markets to continue to perform better after the problems that they had at the end of 2018. This season is rather different because we've had a tremendous run in stocks. We're back above 2,900 on the S&P. We're right at the top end of the trading range. And in order for the markets to go forward from here, it strikes me that we're going to need to see a very good results season. Now, we've already had a number of banks that have reported, and so far the results season has been perfectly satisfactory. And JP Morgan results last Friday demonstrated how a high-quality bank producing very good results could still see their share price reaction very positive on the day, and the shares had a nice rally, while a number of other stocks that have reported more in line sort of results, Citigroup, Goldman Sachs and Wells Fargo, have either been flat or slightly down, but by no means anything to particularly panic investors at this point in time. So the results season continues to accelerate pace as we go through this week and then quickens again as we get beyond the Easter break. But this week we have a number of notable results coming out, as well as some other banks reporting like Bank of America and US Bancorp, but also after hours tonight we have the results of Netflix. And this is a very interesting situation because the shares have rallied very strongly indeed since the lows of late last year, when the shares sold off very aggressively along with the market in general. And we've seen the shares rebound, and they had good results in January. But a new controversy perhaps surrounding the stock is the fact that Disney on Friday finally announced their new Disney Plus strategy. Now, it's a long way away and it's going to be priced differently to Netflix, and of course it's only going to involve Disney content, so it's a completely different type of model in some senses to Netflix. But no doubt investors are going to scrutinise how Netflix are doing more carefully than they have done previously. A, because the shares have gone up a lot, and B, because there's now the threat of competition potentially around the corner. So we think this is going to be an important set of results when they release tonight. Disney is very interesting as well. The results are not due for some while, and perhaps their results are going to be less important, as now the focus of attention for investors is going to be much more on their subscription business, which is going to take some time to develop, but has been a long time coming, but looks very exciting potentially for investors in the long term. And it's noticeable that after 3 years almost, and maybe longer, of Disney shares not really doing anything particularly and being pretty flat in a strong market, on Friday, after they announced their new package on Thursday night, the shares rallied very strongly, suggesting that investors are warming to the idea of what Disney might be able to do in the long term, and have been waiting for this to come through. So it'll be interesting to see how they react when they produce results later this season, and obviously how Netflix responds to the results that they produce tonight. Thanks very much for your time.